now we will move on to our next panel, where we will look into the VC sector more into details. For this panel, we have the chance of having with us Shinji Asada, who is the CEO of One Capital. After working for Itoshu Corporation and Itoshu Techno Solution Corporation, Shinji joined Itoshu Technology Ventures in 2012, where he invested in Japanese and US startups. And recently now he is the CEO of One Capital. Shinji, are you with us?
Yep. Thanks for having me.
Thank you so much for taking the time. So I'd like to move on and discuss the VC landscape, and see with you what or where do you see the most opportunities within the VC in Japan?
So I guess looking at the past 2 years, a lot of the deals has been around enterprise SaaS and AI, and there are other sub-segments like deep tech, space tech, frontier tech, agricultural tech. But I would say a lot of the dollars or yen, JPY, has been around funding enterprise software companies here in Japan.
All right. And so which segment would you say of the VC financing is the most active today? Just to give a comparison, if you look at Europe or even the Middle East, the early stage is quite easy to finance. The rounds move fast, and then when you reach the Series B, Series C, you kind of find companies find themselves in a bit of a gap, and they suffer to reach out to find a proper investor. Is it the same in Japan, or does it differ?
So up until year 2019, I think it was pretty much identical to what you just explained. The Series A rounds or the seed rounds were easy to fill in, but the middle to late stage was vacant. Therefore, the Japan stock market allows small companies to go public at a market called the growth market right now, for companies doing about 10 million or 15 million of revenue, hopefully generating a profit of 1 to 2 million of net profit, which was sort of described as a Series B from a US VC standpoint. That has changed from 2020 to 2022, which was a very narrow window where lots of middle stage funds popped up. Growth stage investors came in from the likes of KKR, Carlyle, Bain Capital, setting up their own growth funds or budgets, and they came into the rounds as sort of like a tourists. But after the tech crunch and the interest rate hike from the Fed scared away all these middle to late stage investors. Now it's vacant again right now.
It's very interesting. And so for you, when you deploy, where do you see value? Where do you see that there's opportunity with tech in Japan? Our previous speaker just mentioned that certain sectors that go with the aging population. Is this where you look at technology that supports this, or you think that there's a much more dynamic opportunities? You mentioned space tech, for example. Where do you see more opportunities?
So my background is around enterprise software investment. Before founding One Capital, I was the Japan head of Salesforce Ventures, which is obviously the biggest SaaS company in the world. And Salesforce Japan, as an operating company, was just killing the market with high penetration within all of their segments that they dominate, like CRM. So the Japan population is aging for sure. Like there's statistics all around. We're probably going to decrease in population about 30 to 30% by 2050, which means Japan has an option: one, to become obsolete as a country, which is not the option that I want our governments to go after, and two is to hike up the productivity rate. And in order to do that, Japan needs to embrace modern software to do their day jobs, even utilizing robots and so forth to actually compensate for that gap. So I think it is vital for Japan to seriously invest in enterprise software and not use legacy, like outdated software running on programming languages like COBOL, which is probably the dominant programming language used at financial institutions, which nobody wants to really touch. So that's why I'm all in on investing in productivity tools. And it's not like all the Japanese companies are going to be using products that come from the United States, because there's a lot of nuances that has to be incorporated. So there's going to be a lot more homegrown SaaS companies. And I was fortunate to be able to invest in some of these homegrown SaaS companies that became build our IPO exits. And I am committed to investing in and finding the next amazing enterprise modern SaaS company that pops up from Japan. And I think we have a good trajectory to achieving that. And just to give you some figures, Japan is literally the second largest enterprise IT market after the United States. So the market is massive, but it's being used towards the legacy on-prem custom-made software, which needs to shift towards more modern cloud-based companies. And then that is also shifting towards being AI first. So that's the domain that I think has the most upside, because that is where we as a country need to really solve the productivity issues, because we don't have a choice. Our population is decreasing.
And it's interesting, but when you look at the SaaS model, one of the key problems that portfolio of these companies face is replacing, as we mentioned, legacy actors, especially when they have to deal with large corporations, and there's a big adaptation or transformation to implement this SaaS. Japan is known for its large corporation. Is it the same? And what type of support do they expect, once again, from VC investors? Do they expect any, or do they just want money and they move on and they carve their own share in the markets?
Well, I think you packed a lot of questions in there, right? So one, the way that enterprise companies adopt software compared to adopting an on-prem customized software, like that is very hard to actually implement, right? Because
Mm-hmm.
it's not user friendly, it's not intuitive, right? But if you start using a product like Zoom, like I am sure nobody has literally read a manual of how to use Zoom, right? You just click on the Zoom app and you click on connect, or and then the next thing you do is connect your Bluetooth device or something, right? So modern SaaS companies are built so that you serve the customers well, or you're going to be churned. So it's super easier to adopt SaaS than an on-prem software. So that's why even in the United States, Europe, SaaS is the fastest growing sector within enterprise software. And that is clearly the case for the Japan market as well. And I guess your second question was around, what do investors, local Japan VCs add to the table for entrepreneurs? Was that your question?
Yeah, absolutely.
Okay. And just to give you context, many of the Japan VCs are professional investors from the likes of investment banking or management consultants, which are amazing professions, but uh, sort of lacking the operational experience that the operators, the entrepreneurs actually need and need to understand, or want the investors to have empathy of understanding, right? So I am an operator turned VC. So there are a handful of operators turned VCs popping up as emerging VC managers. And quite frankly, the feedback that I've gotten from the entrepreneurs are like, Shinji, you understand their business. You understand how to build a product, how to build an organization. So it's a pleasure to work with you. So I think, that's not rocket science, and it's not, you know, too complicated of a value add, but really understanding how to build a business is what entrepreneurs really want as from an investor. on top of the capital that you can, provide them.
And so when you invest in a company, how important is to find proper co-investors, other VCs for the long-term vision of your investments?
Okay, so historically, Japan's VCs used to be very small. The typical fund size would be about 30 million. I was fortunate to be in a position to be able to raise about 170 million for my fund one. So for a Series A round, I do not need to syndicate with other VCs. I can just own the round and deploy 3 to 5 or 6 million uh, for the Series A round, right? Uh, but for a Series B or a Series C round, that's not my sweet spot because my fund's portfolio construction is around investing 80% of our capital into seed and early stage. So I would need to collaborate with another middle stage VC, and there is a lot of them right now, like the Jafcos of the world, Globus, Will. There's funds that's raised over 500 million, which on their perspective, their sweet spot is investing in middle to late stage. So I have, personal ties with a lot of the GPs on those funds. So those are the ones that I partner with.
And they're mostly, are you seeing an interest from, international VCs increasing into Japan and wanting to participate in such deals, or is it mostly closed and difficult to reach? I mean, we know VC is an outliers business, but is it difficult for foreign investors to get on these deals, or is it something that you welcome today?
I personally welcome it, but the language barrier is very high, and probably the cultural barrier is high, even if we are connected through the internet, right? Uh, I'm sure the majority of people listening to this video call has no understanding or information about how big the Japan startup ecosystem is because none of the articles are published in English. It's published only in Japan. I mean, of course, if people go through the effort of translating that into English, they can understand it, but a lot of the media publications are only done in Japan, right? So, and also the nature of a VC business is by design a local business where you have to be really connected inside the circle. So I guess for a foreign VC, it's not that easy to locate who the winners are or the potential winners are, right? One incident is sort of changing that. There's a company called Sakana AI that was founded by Google engineers, and they were on the radar of global investors, and Coastal Ventures and Lux Capital put in a total of 30 million into their seed round. And this company I think is already reaching unicorn status. And if we see several of these pop up, then it's going to be visibly easier for these global investors to start piling in. So, you know, it's difficult to locate a true local Japan startup from a language and cultural barrier perspective, but we will probably see another Sakana AI popping up here and there.
Understood. And so, if getting into the circle is, which is the case in many VC markets, and so does that bring opportunity for local GPs to bring in international LPs? And is this something you feel that not only for yourself but for other VC firms? Is this something that you're pursuing more, or you're looking to keep it within the local domestic market in terms of LPs? I mean.
Yeah, our fund one, fortunately, 40% are global investors, 60% are Japan local investors. Fund two is similar, and our fund two is almost at a close. We've already raised about 170 million, same size as fund one already, within a shorter time period. So, like, you know, personally, we are partnering with these global investors that want to tap in through our lens, right? And then get educated and have confidence in doing a direct, which is likely to be one of our portfolio companies because that's how they're piggybacking on our fund. So it is happening, but not that much right now. I guess it's probably a combination of also the ability to actually explain the market, explain the strategy in a very fluent manner. And I think I have an edge compared to other local VCs here. English is not the first language for many of the Japan local VC GPs. So, given that I have that background, I am taking advantage of that right now.
Yeah, for sure. And so, your focus, as you mentioned, is more on SaaS and enterprise software. Do you have also a insights to share on, the broader VC domain? What technologies, AI is hot everywhere. Is there a particular segment within AI where you think Japanese companies have an edge?
I think AI is, from an industry and a country perspective, we are behind. We are trying to catch up with, Sakana AI building the Japan-based LLM. But I think the internet, I think, English is dominating the internet, right, as a whole. So if you have OpenAI, Perplexity, and these huge, huge AI companies uh, training data on the internet, they have an edge already, right? So, but I guess the question is not the LLM infrastructure layer, but on the application layer, that's where the value capture is probably going to occur. So even if Japan was late in building an LLM, I think we can still, survive and maybe outperform on the application side. So that's what I'm betting on. I guess robotics is also an interesting domain. Japan has always been a good manufacturing company, and given the lack of population growth, a lot of the restaurants are already implementing robots inside their retail stores. And even if you go to a local yakiniku restaurant, nobody's gonna take your plates for you. You just place it on a robot with a handle, and then it takes it away. So robots is probably also going to be a very hot spot.
But talking about robots, we're used to large Japanese corporation doing this development, and so I'd like to move on. What is your approach as as an independent VC players with corporate venture capital CVC? Just to give you a quick outline, in Europe or even in the Gulf region, corporate venture capital is being more active. Some startups are seeking this type of funding. Is it the same in Japan?
Corporate VC was actually larger in terms of absolute dollars deployed into startups, but when you deep dive into each of these checks, they're not writing 10, 20, $50 million checks. They're writing $1 million checks to maybe 50 companies, right? So they're strategic by nature. And I know this for a fact because I was running the Salesforce Ventures corporate program, investment program. And also back at Itochu, I was a part of the corporate VC team. So, the check, the absolute dollars might be big, but per deal was much smaller. But still, that is a big contribution to the startup ecosystem in Japan. And you probably know this, but it's very, very cyclical in terms of being aggressive in investing into startups. And as we saw the stock market of startups just go down, public and private, the corporates has sort of shied away of putting risk money into the market right now. So, but as an independent VC, we have a fund life cycle where we need to invest 5 years. So even so in a downturn, we really want to be aggressive because that's when, the valuation becomes more sober. So I guess it's a partnership long term. I love working with corporate VCs on specific strategic angles, and they have the balance sheet and the cash balance to actually fund the independent VCs as an LP also. So you would also see a lot of these corporates as LPs in these independent VC funds.
So just to jump on, and this will be our last question. You mentioned, your holding period of 5 years. What type of return or multiples do LPs expect for the VC risk in Japan? I'm not, let's talk about the stage where you invest. What is, the benchmark that, they will look at in terms of return multiple for investing in VC?
Probably the ideal multiple cash on cash is 3x. And history in Japan has not met that expectation. It was probably about 1.5 to 2x. I guess that is changing for several of the independent VCs. So the short answer would be probably 3x or above.
Interesting. So it's in line with what you would expect internationally, a holding period of 5 years and a triple 3x multiple.
Mhm.
Great. Shinji, thank you so much for your time and for this overview of the VC market in Japan.